So, hi everyone. I'm here with Paul Rout again. He's the SVP in Wenfresh, and Wenfresh are in the property data and data supermarket kind of area. So, Paul, thanks very much for joining me. Good to see you again.
Yeah, no problem, Chris. Good to see you as well.
So, since we last spoke, I mean, there's been a lot going on, I suppose, with the economy and everything, right? I mean, what kind of things are you kind of seeing?
Yeah, so no, we are seeing a lot. I guess there's a property market element, which
Yeah,
is on about the press, which I think they get a little bit wrong.
yeah,
Record listings for the last couple of years, back to 2018. Not as many sales; they're sort of down. So a lot of talk about that. I guess more concerning for people in the marketplace is the fact that there's a shortage of rental properties. They're really down on where they've been
yeah.
since 2018. Other things, though, specifically sort of client and market orientated,
Mm,
we're sort of seeing people are looking for more automation,
mm,
specifically in the mortgage market. I think the sort of competition platform at the moment there is about how quickly they can underwrite and how quickly they can complete on mortgages. So,
yeah.
we've also got a data as a service offering, so we're sort of right in there at the moment.
Yeah, I mean, what's the housing market? I suppose we're all eyes on that.
Mm.
I mean, we've had interest rate rises that have been happening. I think another one happened this week. Interest rates are going up. We got people on like 3-year fixed mortgages, so a third of people come off every single year. I mean, what's your prediction? I suppose the interplay between interest rates and mortgage rates, and I suppose then mortgage property values as well, because they're kind of interlinked, aren't they? I mean, what do you think is going to happen, or what
Yeah,
have you
yeah,
seen
I think as a
happening?
market, I mean, I wouldn't, I'm not a soothsayer, I won't go anywhere near the interest rates,
Yeah,
but it doesn't look like it's as severe as it could have been.
yeah,
We're talking about, I think it was like last night on the news about it peaking around 4.5, maybe
right.
even where we are at the moment. I think from a pricing perspective, it's going to be a bit more of a complex market. I guess this is the frustrating thing with the sort of journalists and the press, really, about
Mm,
10% here and 15% there. I
yeah,
don't think it's going to be that severe in the marketplace, but I think what you'll see a lot more of is probably the emergence of sort of pockets. So based on geography and attributes of property, I mean specifically I can talk about where I live at the moment. In terms of 4 bed plus properties, absolute shortage in the entire county. I think we only are a small county, in fact the smallest, there's only like 3 properties on the market. So it's going
yeah,
to be based towards that, but it'll be interesting to see if, I guess, consumers stick to the guns on the prices as well. So I wouldn't expect probably more than a 7 to 10% cut in house prices, but to be fair, they were overcooked anyway in the sort
mm.
of last sort of year, so they're probably going to level out where they actually should be.
Do you think that'll be moderated? So the actual pure absolute value of house price will be moderated with inflation, right? So if we're seeing like significant inflation, then it actually, in real terms, the house price goes down a little bit, even though the actual value might not go down a bit. Do you think we're going to see a bit of that, a bit like the 70s?
Yeah, no, I think so. No, I think you're right on that. But I mean, I guess what we've seen with inflation so far, prices have still been rising. I think that they're
Yeah.
starting to sort of tip down a little bit now, but no, again, nowhere as severe as they were. So I think again, it's more the theme is that balancing piece. I think it will balance out.
Yeah, what about the split between, I suppose, a lot of people were sort of moving out into the big houses in the countryside. I suppose it was from London during the
Yeah.
pandemic, and there's a little bit of, I've heard a little bit of sort of like people sort of moving back to the softening of the really rural market, and sort of maybe a little bit sort of like people moving back into cities or more sort of commuter belts. Are you seeing anything like
Yeah,
that?
no, I think that's definitely the case. I think
Mm,
it's probably because of the inflation where it's sort of been. I mean, the housing inflation and where it's been really is that people have done that, and then the number of houses that came on the market because they knew they could get a premium. There's a lot of people sort of moved up from London where we are because it's relatively commutable and it's not
yeah,
these sort of prices that you'd expect. But that's definitely softening now, without a doubt. I think
yeah.
there's not as many properties available, and that nobody's taking advantage of it. But that was that artificial element, I think, of that sort of rise. People looking to get out.
Do you think we all moved out of London too quick, and maybe the reality
Yeah,
set in a little bit? What do you
maybe.
think?
Yeah, maybe. But it did. I mean, did it rebalance some of the rural areas? I think if you go, north of London, yeah, it's probably sort of re-indexed those in terms of the house price and stuff. So there is a bit
Yeah,
of balance that's come out of this. But
yeah,
I think the other problem that's happened as well, obviously with the strikes and the rail and everything that's going on at the moment,
yeah,
people are working from home, obviously, but people are starting to need more access into London, and
yeah.
it's a lot more difficult if you live in, an hour and a half out.
Yeah, well, so you can't. I mean, driving is pretty prohibitive, isn't it? So if you,
Absolutely,
if you
yeah.
live an hour and a half, What are the dynamics then that happen between, I suppose, the purchase market and then the rental market? You're saying there's sort of like, the rental market is the sort of like
Yes,
oversupply.
just from a listings perspective, I mean, there's some unsurety around the rental market at the moment because I think there's various sort of government sort of callings out there at the moment around what they may be doing with the rental market. I know a lot of local authorities as well are extending things like HMO schemes into selective areas. So effectively, that's becoming more like a licensing scheme if you rent rather than anything else. Obviously, a focus because of housing conditions. There's a big drive in the local authority environment from central government for housing conditions at the moment. That's probably putting people off in terms of the rental. And then I guess the final thing is the EPC element of it as well, is that I think it's E now, isn't it? You can't have an efficiency rating E or less, otherwise you can't rent the property out. And it works from both sides, a funding point of view. So BTL mortgages aren't being issued to people who haven't done the work or got their houses up to the thing, but also the restrictions by local authorities. They are taking data from us on APC at the moment and literally going around those properties and seeing if they're being rented.
And how do you look at that? I know some of the stuff that you do in terms of like looking at things either from satellites or looking at like the property data. I mean, how can you sort of tell from a almost like an energy efficiency point of view? I mean, is that something that we can use to really understand our own efficiencies as much as
energy efficiency from that point of view? We've got a couple of elements that we look at. There is the standard EPC piece, which is the data, so we hold all the data, the current and the potential, but all the survey information. So there's around 16, 17 million EPC surveys that have been done, and we've just got that data. A second thing is that we've got access to emissions as well, so we can actually see from satellite what the emissions are from each property in the UK, and we're just folding that in at the moment to sort of get a view of that. So surveyed and non-surveyed, and what we're actually doing is looking at properties that have not been surveyed in terms of the EPC, looking at the emissions, and we're doing a comparative analysis to see if we can allocate an EPC rating for a property that hasn't got one at the moment. And obviously with the typology of the property, the attributes, we can work that through. So yeah, there's a big push on things like that. Councils, private sector and the mortgage sector really looking at.
And emissions, you mean sort of like infrared emissions or those kind of things?
Yeah, so it's heat leakage, leakage, that kind of thing as well. And that, there's calculations which turn that into, so how much energy you're burning, what's the emissions in that thing, how efficient are you, etc., etc. So we sort of using that thing. But I guess the other aspect of it as well is a lot of interest in green mortgages at the moment. I think Lloyds have just done a deal with Octopus Energy, haven't they, around property. So that's probably the other key theme in the mortgage market at the moment, is green mortgages and the links with that.
Well, I suppose energy cost is a big driver of inflation
Absolutely.
recently, isn't it, as well? So it's like the more we can do on that.
Absolutely.
So you think sort of like the mortgage, the property market is probably going to soften a little bit, but maybe not quite as much as we think, and maybe the arrears market, or the arrears volumes maybe not quite as bad as you think. Is that kind of what you're thinking?
I think people are going to sit tight. I think you think about it as I always call it a delinquency cascade. Your house is the last to go usually, isn't it? So I don't think we'll see a lot of secured sort of collections. I think the lighter stuff definitely, from the work we do in the collections market with the ECAs and the like, and some of the specialist services. Definitely expecting, I wouldn't call it a tidal wave, but a wave of some sorts in terms of collections activity. But I think the interesting thing is as well, I mean, you'll probably know this, Chris, having experienced the market, it's usually all about purchase or new debt, and that's what they're interested in. There's a lot more focus on the existing portfolio at the moment. So things like flight risk and, are people moving, change of circumstances, pressures on standards, cost of living. There's a lot more concern about people's ability to keep up payment plans and things like that.
And so one of the big changes we've seen now is the fact that it's kind of, we don't have stability. We've had like stability for the last sort of like 20 years, or even maybe a little bit longer, about 30 years in terms of like the data. So like, inflation wasn't particularly big, there wasn't a lot of sort of changes in different categories of spend and those kind of things. It just feels like the last sort of 6 months, that's sort of like, that's one of the things that's really changed. And I suppose the question is like, how do we use that to understand things like affordability, or how do we use that to understand financial stress on consumers? And we were chatting a little bit about, I suppose, new sources of information to be able to do that, because it doesn't feel like it's a stable market quite the way it has been. I mean, some of the norms we had before don't feel like that's where we are today.
No. I mean, there's obviously people's ability to pay, and there's plenty of organisations around there who keep record on that. I think where we've sort of looked at it, it's probably it's the area, the type of property that you live in, the amount that you're paying for that property, the amount and levels of rent, whether it's institutional, social housing, if it's a HMO. They're the kind of sort of, I guess, pieces of data we're putting into sort of gradings at the moment. And it's quite interesting actually, because it's the whole sort of multi-use landscape of data. So vulnerability and that sort of pieces come out the back of sort of HMO, but we've been using that with local authorities, buy to let. We've been checking on that, central government for a couple of years now, and it's interesting how you can swap it out into sort of other sort of areas really.
Yeah, I mean, do you think you could estimate people's energy bills based on where they live, which then might be indicative of affordability? I mean, those kind of linkages, isn't it?
Absolutely, yeah. I mean, rent paid. I mean, we do a lot of work with central government on some fraud aspects, which do use some of our sort of rental information and things for some of the benefits that they do. And very much so. It's really indicative. But also, there's a lot of tricks out in the marketplace. People are sort of cute to data as well, but all the standard data sources. So, but with property data, I think the thing with property data, I've probably said this before, is most of the stuff we collect isn't declared by a consumer.
Yeah.
It's part of a process, a rental process, a conveyancing process, a survey, or it's photographed from space, for example.
Yeah.
There's very little room to change any of those aspects.
I mean, it feels like data is one of the things that people seem to be looking at now. I mean, I've had quite a few conversations around data in terms of like, how do you get more data? How do you get it faster? How do you get new sources of information that's maybe different from the way it was before? I mean, are you seeing that kind of trend? I mean, you're in the sort of like it's not really new information, but you're in the new information space as far as we're concerned, really. I mean, this is stuff we haven't seen before. I mean, are people looking to that? Or?
No, it is. I mean, I think it's what I said at sort of opening, really. It's sort of speed of data availability, so it's sort of recent, frequent, fresh for us. So what I said about the mortgage market is they're looking to speed up the process of getting that mortgage. The thing that's always slowed it down is conveyancing, but also the underwriting of the property. That's where that data's coming in now. We can do it real time. It's extremely fresh. So but that's really a key theme. I think away from the property market, I'll go back to the HMO information. I mean, that's another sort of key point on that is that's new data which is coming in there, and we've moved from producing a model for HMO to actually getting real data where it's being surveyed by a rather large postal operation where we understand what is multiple occupancy. But I guess the other side of that again is, I suppose it does call out to the sort of recency, frequency, freshness of data, is the whole trace process in the collections market. We're seeing more preemptive work being done. So we obviously take transactions and movers information. People are looking at flight risk now rather than sort of trace. And we've had some really good results in the utilities market in terms of final billing and sort of arrears. Where we've seen a 20 times uplift on their sort of collections rates and collections rates at final billing point as well by using that, where typically they've not been paid and been chasing it through the traditional mechanism of trace and all the usual kind of things. So I think it's the awareness of that data being available, but the availability of that data. I think there's more and more transactional information from our perspective, both in the market, but also in the property area, which sort of serves all these markets.
Yeah, I mean, how do you find it in terms of clients being able to process this information? It's one of the challenges we kind of have. Is almost like there's so much information out there. We saw this with open banking, right? Which is, we've had credit bureaus been around for a long time. I know you know that well. And then we've had open banking that's come through. There's a whole slew of information come from that. Now we're getting property information. We're getting like extra demographic information. Those kind of things. It's like it keeps like it's ever increasing. How do you find in terms of like clients being able to process it all and almost like find the nuggets of gold that are really indicative? I mean, what do you think is the best approach?
So I think, we've probably done more and more aggregation of data into sort of I guess scores and RAG statuses than we've sort of ever done. So we are doing some of the heavy lifting on that, I guess. Yeah. Part of that heavy lifting is that we do two main things. We've got APIs and batch, but we've probably built more, I guess, what would you call it, monitoring-based systems and trigger-based systems for people. So we are holding, at address level, because we can do it, information on properties for utilities companies and whatever, and we're triggering out when the event happens. So as soon as the refresh is out on that day, and it's sort of done. The other way of looking at this, I'm just working with a company who are just starting up a property fraud service across insurance and also to the consumers as well. But there's literally, as soon as you register and stuff, they're pulling, we're driving things through an API so people can service their own thing on a dashboard and they get alerts. So I think it's a shared problem. I would say is probably the easiest way of doing it. Is I think there's results around it in terms of the traditional stack of data that they've got. I think it's relatively easy to manage. I think we're quite fortunate because we only have half of the matching to do because we do it on address level. We don't need the consumer information, so it's quite hard for me to comment. I think on the other consumer sources.
So it sounds like we're getting all this extra data, but it's almost like for us humans, for us to be able to digest it, it's that trigger stuff is really sort
absolutely
of so they're trying to make it simple, I suppose, for the end user.
And I think for us, it's black and white. Yeah, somebody's moving or they're not moving. The house is worth X or it's worth Y. And it's got an environmental problem, so you're not going to underwrite it. So this is real data. So there's no real level of interpretation. We typically in the mortgage market we take an institution's lending policy rules, and their policy rules contain an element of property policy. Yeah, we won't have things with mundane brick, and we won't have them in these areas and this kind of thing. And all we're doing is taking that information, running it against the data. We spit that data back out for them, but we actually make the decision for them as well. Is it a yes? Is it a no? Does it need to go for a full survey, or can it be passed through on a green lane channel, fully automated? It's relatively simple. I think there's trust there to do it, isn't it? I think. That's part and parcel. But I think there's less and less interpretation needed because of the data that, especially that we do, is out there. It's black and white. It's either real or yes or no, real.
And I suppose, do you sort of treat that as almost like, well, here's the trigger, and it should trigger a manual investigation versus a no? I mean, I suppose a yes is a yes, right? And that's the risk the company kind of takes. But if it's a no, the trigger for a no, does that typically result in a manual kind of review?
Well, interesting. We've got a new partner that we're just working with at the moment, which I think you know anyway. But it's around the I&E space. But what we're looking at the moment is. We obviously have a trigger, which is somebody's moving. You think about the collections market, for example. We can trigger the fact that something needs to be done, i.e. in this case, an income and expenditure survey. So we will trigger what is a piece of software which automates that and does that. And all the clients will see at the end is a brand new I&E or a new payment plan in place. So we're actually walking through that thing at the moment. So obviously loads of operators, loads of collectors, whatever they do, but there could be this other sort of overarching piece, which is people just constantly risk of moving, risk of change of circumstances, and that's just generating that all the time. So it's hitting the regulatory thing, but it's also maintaining the communication, and it's highlighting the fact that these guys have a change of circumstance.
Yeah. I kind of interested into so we're in this sort of getting triggers, and we're sort of we're trying to make it easier for humans to digest. And I suppose then I got completely enamored by the ChatGPT example.
I've been looking at that as well,
and all of that. And where do you think we're going to go in terms of all this information? This problem of having just almost like unlimited amounts of information, and then being able to digest it down to those triggers. Do you think we're going to be able to use the computers to be able to do that? I mean, is that where it's going?
I think you probably will be able to. I think obviously the whole AI sort of bandwagon, but I think it's more simple than that. I think there's some pretty common sense sort of sorting that an individual can do. I mean, for me, what is important? A change of circumstance means new job, new move, whatever. There's real data on all this stuff out there, yeah. So why wouldn't you just prioritise that use over a few models and things that are going on?
Yeah, and I suppose you've got different layers. If you've got the obvious ones, then you've got the next level ones, the expert ones, and I suppose we're probably saying we probably still haven't done the basic ones, right? So there's a lot of basic ones we need to do with some of the data.
Absolutely, but that is the bizarre thing about it all, is that some of the basic fundamental triggers, which significantly change an individual's sort of life or behaviours and whatever, nobody's looking at all. It's really strange. I mean, if I'd be looking for employment data out there. If I could find, when somebody's employed, when somebody's not employed, I guess open banking's a route to do that from an income point of view. But that would be a key trigger for me, because that's your cash flow, isn't it? Somebody's moving house. Are they spending more? Or are they spending net less? If they come into sort of money, equity, and that kind of thing, really big trigger, yeah. But also from a contact point of view as well, massive trigger if somebody's moving. But people are only just beginning to sort of clock onto that. But I think it's a blend of property data has been used in the property market, for example, and nowhere else. And I think now we're pushing it across other markets, and it's due to people's experience in our business and whatever. But we're beginning to see sort of multi-use for the data, and I think people say, "Oh, I didn't." We get it every time. I didn't realise that was out there.
Yeah. And I suppose, how much do you think we're sort of over-reliant on the machines to do the interpretation for us versus almost like that human-centric kind of thinking around extracting the data? Because it's almost like the ideas to come up with is like the fact that you might have lost your job, or you might be in this particular situation, or this kind of scenario might happen from a housing point of view. I mean, do we need to overlay more sort of like human-driven type
I think so. I think there's
understanding psychology, right?
Yeah, there's an emotional element to anything, isn't there, which I don't think the machines can interpret. I think that's absolutely right. I think I always think of things in a process by thinking, what would I do? How would I behave? What the route that I would go down, and try and overlay that into the business situation that we're sort of looking at the moment. And that usually gives you the outcomes and the sort of touch points that you need to consider.
Yeah. That's very interesting. So where do you think we go from here in the back end of the year? I mean, what's your looking at your crystal ball? Where do you think Where do you think we're going to go? Is it going to be like the ball behind you with sort of like all different shards everywhere?
Yeah, I mean, probably. I think a lot of it stems around what the government are going to do and what the changes are going to do. I mean, if everything remains, on a path without any major changes going on, I think that's probably, not upsetting the apple cart, laissez-faire, etc. Just let it be at the moment. I think we'll be fine. I just don't know, because there's so many twists and turns. I think I commented before when we spoke then back end of last year, we would have had a very different conversation around sort of trust and everything about what was happening in the marketplace, and it's not a great amount of time for the sort of series of changes that have happened. We've seen go on in the markets. So I mean, I think I'd probably wait until the next interest rate rise or not, and see what's happening. I think that'll sort of dictate in a way. I think more concerning is probably the economic growth element. I think that's where everything will start to come out of. I think there's some changes that need to be made with that.
I mean, if you were sitting there as a risk manager, I mean, what do you think the big five risks you'd be worried about? Because we talked about a lot of the risks now. We've talked about environmental risks. We've talked about interest rate risks. We're talking about credit risks. We're talking about property. We're talking about a lot, right?
Yeah.
You have quite a vision over some of those things. I mean, what do you think the top five are that people should be worried about?
Oh, five stretch. I think that. I mean, for me, I think there's going to be 2 million mortgages in the next 12 months. Mortgage shock's going to be a big one. I think that. The thing that changes is the fact it's an increase, but it's going to be a rather large increase for most people. That's what I'd be concerned about, is affordability. I'll be worried about the exposure to that affordability in terms of what I have with people. What else would I be worried about?
What about the environmental aspect? I mean, you do quite a lot of that. I mean, that's sort of been changing, I suppose, but it seems like it's a slow boil almost in terms of like it increasing. So I know we talked before about soil changes as an example. We talked about, and we talk about energy leakage. We just talked about that now. I mean, how do you think that's going to impact? I mean, is that just something that's going to keep on going in the background? And it's almost like if it rises slowly, we don't notice it, but actually it is a risk that's kind of.
Yeah, no, I think it is. I mean, to be honest, I think it's being, I guess, disguised to a certain amount by political war things that are going on at the moment, Ukraine and that kind of thing. But I think there was a real need to do that before anyway. People and there's, I guess for me, there's a blame, isn't there, on that? And I think it's too much of a blame about why energy costs are going up. They're all just going to naturally happen anyway because things become more scarce. So I think, to be honest, I think the financial services community are reacting to it, especially within the mortgage space, quite well at the moment, because they are looking for the sort of green element. They're looking to remediate things like roof leakage and whatever. They're looking to help people and fund people's new heating systems and solar and insulation and that kind of thing. So that's going in the right direction. I don't think it's getting as much exposure as it should do, or as much encouragement by the government as it should do. So we can see more and more of that sort of happening. I guess the other thing is that we sort of think about is sort of new old houses as well. I mean, there's houses which are restricted in terms of how efficient they can be. Typically older, bigger, larger and stuff. So I'd be interested to see what kind of impact that has in the marketplace as well. We're not talking about your £3 million mansions, which anybody can afford, but just generally older properties which are restricted on what you can do.
Yeah, particularly in the rental market, when you're looking at say some of the inner city rentals, and thinking back to student days, if you're just, some of those Victorian terraced houses, aren't necessarily weren't well insulated at the time, and what there's only so much you can do with some of those as well.
Yeah, yeah. But it's the whole. I mean, you look at the whole thing in terms of the technology at the moment. You've got, from a heating perspective, all the ground source and stuff. You can't have them in flats. You can't have them in terraced houses. They've got to go on your wall. They produce a pretty much an ambient temperature thing. I don't think they're that great from what we've heard. Electric vehicles. I mean, everybody's getting pushed towards that terraced housing, flats. How are you going to do it? There's not the available thing. So I don't know. I think there'll be a shift, rethink towards things. I don't think we're quite where we should be with everything at the moment. I think they need to rethink it all.
Right, so it's a world of change, that's for sure.
Yeah.
So Paul, well, thanks very much. I appreciate it. It's always good to get a bit of an insight on the property market as well, outside of the environmental stuff as well, which you seem to have a pretty good handle on. It'd be good to look at longer term trends, because you probably get to see some of those things as well.
We do, yeah.
So it's definitely a concern. So, but Paul, thanks very much for the insights. I really appreciate it.
No problem. Good to see you.